Hello everyone, thank you for tuning into this video. Today we're going to be going over IPOs and why you should not invest in them straight away when they hit the market. Let's get into it. With the recent hype around IPOs since Coinbase has just hit the market, a lot of people have been asking me, should I invest? And I've told a lot of people to actually wait a couple of months, if not a couple of weeks, and actually see how everything plays out, see what the technical analysis plays out, see how the business structure and everything actually comes to play. In the past, there's been you can do a lot of backtesting and actually see that a lot of companies have failed to IPO at a great price, and there has been a fair good dip in the price where you can pick it up at sometimes 50% of a reduction, and that's a great time to pick it up and then hold for the long term. So IPO, Coinbase has recently IPO'd here, and a lot of people, it's a lot of hype, so being able to buy, sort of get into a company that helps you buy Bitcoin. And it is very, very interesting. A lot of people, they IPO'd around $300. A lot of people thought that was quite expensive. But again, that's where you need to do your research and see how many shares are on the market, what the market cap is, and actually determine if it is a good price. So coming over to the price here, you can actually see as soon as it IPO'd, we started around $390. We shot up to somewhere around $430, so a nice price increase just from the open, good 30-40%. Oh no, sorry, it's 10%, which is great. But then as you see, bang, we've just dropped a good 25% instantly, and now we're down close 34, and now we're about 30% down. So here, as you can see, if you were to buy the IPO as today, you would be down around 23%. So if you put $100,000 in, you'd be down close to $25,000, which is a lot of money. So as you can see, it hasn't been a great investment. And I just want to show you guys that a lot of companies actually haven't been great investments when they first IPO. There's been companies such as Snapchat, Facebook, Uber, Lyft, and even Twitter that had horrible IPOs. You would expect something like Facebook, such a social media giant, to have such a really good IPO. But you'll see in a second here, I'll move on to it, you'll see that the price action was absolutely horrible, and it's better off to not invest in an IPO. Let's move on to the next one. Here's another example on the weekly. Now this is Facebook. As you can see, Facebook opened at around 42 rough dollars, came up to around $45, and then instantly had 40% correction. This is on the weekly. Had a bit of a bounce and bang. Within a few months of actually being out, we're down close to 60% on something like Facebook, absolute social media giant. So it just proves that amazing companies that you might think might initially IPO and absolutely crush it, a lot of the time they don't. And if you do a lot of backtesting and actually look at these big companies that IPO, you find that it's better to just wait how the price action plays out. Even if it does have a slight buy, you can then grab on it, but a lot of the time the price action does look like this. Now we'll move on to Snapchat. Now here we've got Snapchat. As you can see, look, we opened at a price $25, and we've just been going down for a very long time. They instantly dropped 30%, and their all-time low was close to 82% to the downside. And something like Snapchat, where a lot of the kids and a lot of people are actually using Snapchat, very, very, very sad to see that this is what happens. But again, we'll go over soon as why this happens and why there's overly hyped, and how a lot of people actually use this as a potential exit strategy. So let's move over to Uber. As you can see, this is Uber, same thing on the weekly. You can see we open, we had a slight increase, and then a massive decrease, a lower high, and then a massive sell-off here, going close to $14. So from the high, from when it IPO'd to the low, we're down 67%. So being able to pick it down here for an extra 67%, that's, and obviously we've gone up very, very high, and we've continued from that downside. We've done multiple hundreds of percent to the upside, but it just goes to show that don't look to buy it on the IPO. Let's see how it plays out. This one even took a couple of years. It opened in May of 19, and the low was when the pandemic actually came through. So sometimes it does take a while, and even if you were to pick it up here in the 27s, you still would have doubled your money, which would have been a nice pickup. But at least if you were to pick it up down here, you're at least getting a 35% premium, you know, when you pick it up down here. And that's the goal, is to just buy everything on value. If this is your investment strategy, I like to play the technical analysis, and the technical analysis shows that in the long term, a lot of these IPOs might have a quick rise up, they have a good drop down, then you buy in for the long term. If you want to hold for 5, 10, 15 years, that's the time to buy. And it was just proven on Facebook, as I showed you. We'll go back to Facebook here. Quickly scrolling through, as you can see, it just looks minuscule here, opening up and then dropping 55%. Like, it doesn't look on this, but then having that 55% decrease and then holding it all the way here, you're up 1800%. And that's where, you know, you get it in here in 2012 and you just hold for 10 years, and 10 years is coming up now. And that's where you make your gains. That's really the goal of this. Okay, I've got 2 more companies to show you. This one is Lyft, which is a Uber competitor, driving company, or it's like a delivering person company. So as we can see here, when we opened, we started at $78, came up to 80, you know, close to $90, and then we were down here at $14. So just a massive 81% decline. Absolutely horrible. And similar sort of story with Twitter. Here, as you can see, where we IPO'd, we had a nice pump here. We got 70% on Twitter, but again, we still inevitably fell, and even from the open, we fell a good 67% nearly coming back. Obviously, we had that incline, so it just proves that let all of this play out, give it a little bit of time, and then get in to ride this massive wave. Now, I want to go over why a lot of this happens, and I actually have it all written down here. So why does this actually happen to IPOs? Why does all of this emotion, how does it all play out? So what IPOs do, they gather a lot of buzz and emotion, because when something IPOs, when Coinbase IPOs, there's a lot of marketing around it. There's a lot of buzz. There's everybody talking about it on social media. IPO. Twitter was going crazy the couple of weeks before Coinbase, especially the night before and the day of, a couple of days after, going absolutely crazy. There's videos everywhere on TikTok, YouTube, and it gathers that hype. A lot of people go, yep, we need to get in. And as you can see here from Twitter, and as you saw before from Coinbase, it just doesn't play out. Coming back to Coinbase here, as you can see, the excitement for the stock exceeds its true value. Everybody's hyping it up, and we don't actually know, coming down here to the full company analysis needs to be performed. You need to actually understand the business model. How are they actually making money? You understand that Coinbase are making money off fees, where when you trade, they're taking 0.1, 0.2%. They might take a small percentage off your credit card every time you deposit. They might take a small percentage every time you withdraw, and also send your money to another wallet or withdraw it in cash, and all these other things. So people might actually not understand fully how they're making their money, and they might just assume they're making so much money because they hold the Bitcoin or something. They might just be holding other people's Bitcoin. So we need to fully understand. Then we need to go into the capital structure, the actual debt to equity ratio once they raise everything, the total shares issued and their market cap to be actually determine what's going on. Company management, who's actually running the company? Do they have a track record? Are they actually any good at running a company like this? Have they proven themselves in the past? So we need to look at a lot of these things, and that's where the excitement and the hype for these stocks actually outweighs the true value. And we can just see that here, just have massive drops. Could have picked it up here for potentially a better price, and I still think here, just hitting the EMA, we could have another downturn. Don't know exactly to what price, but again, using just my technical analysis type of thing, we could just do a 1-to-1 strategy down to here, because that is not a doji bar, only because it's such a big, we could be coming down to here. What's that? 250 rough dollars. So, I just don't trust the IPO as the buying price for me to hold for the 5 to 10 year mark. So I hope you've enjoyed this video and got a little piece of knowledge. Make sure to subscribe if you haven't, and check all my links at the bottom if you'd like to learn some more. Thanks for watching.